It's long been believed that houses on land outperform apartments in capital growth, but with more buyers turning to apartments, is that still the case? And is the game changing before our eyes? I'm Terry Ryder, and the Property Playbook starts now. Welcome to the Property Playbook, presented by Hotspotting, where each episode we empower you with expert insights and trends to thrive in today's competitive property market. Now, attached dwellings, units, townhouses, apartments are becoming the top choice for more buyers, with some analysts calling 2025 the year of the unit. Does this challenge the long-held belief that houses deliver better capital growth? To explore the shifting market, I'm joined by Michael Wilkins from Nuestar, one of Australia's top real estate firms. So Michael Wilkins, welcome to the show. You wholesale apartments, house and land estates, but also recently industrial properties. But let's focus on apartments today. How has the performance of apartments changed in recent years in your view?
Yeah, thanks Terry. I think when we're looking at apartments, we've seen a lot of changes in the demographics of people looking for apartments. If we look at it at a national basis, we've seen capital cities such as Perth, Adelaide, Melbourne, Sydney, Brisbane, all looking at other alternatives outside of just house and land. And we've seen some of these corridors, and probably around that supply and demand, we've seen some of the growth corridors near train stations, all looking for that increased density, and people are looking for more affordable opportunities in apartments. And what we've seen probably even post-COVID is a real change and shift in people looking at what they want to buy and purchase from an investment point of view. We understand apartments perform really well as a yielding product, and we've seen over the last couple of years, as you were saying before, that there's been some good increases in revenue we're seeing in apartments across these capital cities, and most of these are around areas that have got population, infrastructure, and employment. So we're definitely seeing that in our in the projects that we're looking at.
So it's fair to say, I think, isn't it, that the market share of apartments in our major cities and across the country generally has increased in recent years. It's actually more and more buying cohorts are making that choice for attached dwellings rather than detached.
Yeah, and I think there's more opportunities. The market has changed. The way our apartment actually looks and feel has changed as well. We're looking at developers spending a lot more time on floor plans, floor plates, the location, what they're actually delivering from an amenity point of view. And a lot of these are around train stations, transport nodes, infrastructure nodes. So you can get the density in doing those, but also we're seeing a lot of owner-occupiers come back into the market too. So it's great actually being able to go in there early as an investor.
So Domain, the research house, is predicting strong growth in apartment prices across many Australian cities in 2025. And in many cases, they're forecasting that apartment price growth is going to outpace houses. Do you agree with that forecast, and what are the factors driving that? I
think the factors we're looking at, and for example, we recently did some projects earlier last year in Perth, and we're seeing this middle ring in Perth. So Perth predominantly has been sort of more of a house and land, further sort of middle outer ring, but we're definitely seeing a real shift in that market, in that sort of inner ring, in for example like Perth, and we're seeing some good growth in there. Sometimes up to sort of 10% when people are going in early on projects, and projects are starting. Markets such as Brisbane, you've got Olympics coming, and we're seeing really there a market that's looking at where the infrastructure is going to be, and apartments are generally around that where you can get that density, and a lot of the projects, say in Brisbane, are around those sort of density nodes.
Yeah. So speaking of Brisbane, you publish a quarterly report called The Rise and Rise of Apartments, and I've just been reading the latest edition in first draft form, and one of the points that's made is that in 60% of suburbs across Australia last year, apartments actually outperformed houses on capital growth, but in Brisbane it was 87%. 80% of 7% of suburbs in Brisbane, apartments actually achieved higher capital growth than did houses. So I think that supports that the point you're making, that buyer demand is rising for this product.
Yeah, and I think when we went into projects early in, say, 2002, 2003, you're in a lower interest rate environment. There was obviously construction costs were moving. We were going into projects really quite early in areas in, say, Brisbane, for example, West End, projects in Albion, these inner city projects where the demand was starting to increase, and you could see some of the investors sort of selling off some of their sort of second-hand projects and going back into the new projects to look for higher yields, better rents, better location, better amenity.
Okay, so as long as we believe that houses outperform apartments on capital growth, and we're seeing that change quite dramatically in recent years, and forecast to do so further in 2025. It's believed that the land content is the big thing, but obviously apartments have elements that houses typically don't. So what are the advantages that apartments actually have in terms of generating capital growth over houses?
Yeah, I think some of the big ones is when you're located in an apartment, generally it's near some sort of transport node, so you're going to get the lift of that. So there's going to be an increase generally in jobs, population. People want to be close to where the amenity is, definitely close to transport, and people are, a lot of people may not have a second car. So if you're looking at an apartment, they want to be on that transport node. So we're really sort of seeing that being near amenities, that lifestyle's becoming a big thing as well, and obviously security and safety has been, on the top of every government's agenda at the moment. So when you can lock up an apartment, it's very safe and secure from that point of view, from the ground all the way up.
Also views. Some houses have views, but most don't. Most apartments do. That must be a major selling point as well.
Yeah, and I think that's about getting into projects really early and looking at the opportunities in projects. And views are one. Like, you get projects that are really based on its location, what the surrounding is. But there are. We just recently settled some apartments in Brisbane just last month, and definitely the people that went in early took that advantage of the views and height, and now 2.5 years later reaping the rewards.
Yeah. So with the work you do at Nuestar, do you find that the main motivation for people to choose apartments over houses is affordability, or are there other factors like lifestyle, security, low maintenance, those sorts of things?
I think there's a couple of factors. I think big one right now is there's a bit of a supply and demand change across the country. We all know that, as you were saying, Terry, that we're in the low vacancy rent market at the moment, and I think people are making those decisions around it's an easier transaction to do from a point of view of you can get into an apartment. There's always going to be demand in that area, especially around the inner city, for a tenant, and typically we've seen those rents really drive the yields in some of the capital cities.
Okay, so how crucial is location when investing in an apartment, particularly for long-term capital growth?
I think there's three things. There's population, infrastructure, and employment are three really, really critical elements when it comes to locations of the apartments. Again, looking at projects, we're looking at projects in the Western Corridor in Sydney, and you can see there's a population boom going to happen in that Western Corridor. So there's got to be the supply to deal with that. Apartments can go up, and obviously it takes a lot longer to deliver house and land out. So areas in the Western Corridor, such as Penrith, where there's train lines, amenity, and you've got the airport, the Greater Western Airport opening in Badgerys Creek, you're going to need to have some housing supply there, and the easier way to do that is to deliver. Apartments will really want to be in those areas close to transit nodes so they can get to work.
Yeah, that Western Sydney Airport and all the aerotropolis that's been built around it with medical and education precincts, commercial precincts, must be a huge generator of demand for real estate out in that precinct.
Well, I think if you look at Sydney, and most of the projects that we look at and focus on are within 500 metres of a railway line. So Sydney works really well, and property's always done well over time, particularly apartments when they're really well located. So projects, and the aerotropolis is the biggest commercial project right now in the country, as you're talking about. These are the types of people need accommodation. They need rental accommodation close. So if you're in Sydney and you're in that CBD of Sydney and you're working out at the airport out there, it's a long journey. But if you're in close in a transit node on a train line, you can get to work in 15 minutes. Well, you're going to choose that, and you're probably going to pay a premium for rent.
Yeah. I think the research shows that the biggest single motivation for people in choosing location is proximity to where they work. So, that is obviously going to be one of the biggest jobs nodes in the Greater Sydney area. So it's going to be a huge generator of demand from tenants for developments as well as home buyers.
Yeah, and I think you're right there. Tenants actually do. they're paying more for rent now, so they want more, when not just from the apartment from a design perspective, but they want they want to be able to go downstairs to the coffee shop. They want childcare underneath. They want to be able to walk to the train station. So they want to be able to do what they want to be able to do near their apartment, almost on foot.
Okay, so I imagine many of your clients actually buy apartments off the plan. They buy them before the thing is built. What sort of evidence has there been with some of the recent projects that you've been involved in that values actually typically increase between that contract signing and completion of a project?
Yeah, I think if you look at a developer's feasibility and getting into a project, the idea is to get in as early as you can, because we work in that wholesale space. So it's about getting in first and getting in early. It's the riskier part of a project, but for investor to come in, you do get rewarded with that because you're going in at the entry point of a project. As a project gets out of the ground, developers will particularly increase the price, and they'll move some sort of a pre-sales to out of that wholesale model into a more retail model. So construction goes up, the risk in the project decreases, so you start seeing a different type of buyer come into that market. So we often, the case is go in as early as we can, handpick whether it's townhouses or apartments or industrial as early as we can, and we invest in the projects as well.
Okay, so you published a quarterly report called The Rise and Rise of Apartments, which is an innovative report. It seems to be getting quite a lot of media profile. There's a new edition coming up. What are some of the highlights that are coming up in the new edition of that report? Well,
I think what we're seeing, Terry, is a shift again towards more apartments are being transacted in the market, and it's catching that old phrase of, everyone was buying a house. Well, it is shifting, and I think what we're seeing, as we read that report, we're seeing more people move to more. I think affordability is a really key factor right now as well. Apartments are in that affordable. You want to live in the inner suburbs, you can find an apartment that's affordable. But if you're looking at housing, sometimes in some cases, when an apartment's $700,000 or $800,000, the closest house in that area could be double the price.
Yeah, one of the points in the report that stood out for me is that now in the Greater Sydney area, 55% of all sales that occur in that market are actually attached dwellings, units, townhouses, rather than houses on land. And the market share is also rising significantly in Canberra and Brisbane, in Melbourne and the other major cities. So there's definitely a shift on in the market, isn't there?
I definitely think there is, and there are some constraints in the market which is making the supply a little bit harder to come into the market. But people again are wanting convenience. We're in a market right now where people are looking at their dollars and cents and trying to add up, so they don't want to have long transport costs. Fuel costs, their external costs, groceries are getting more expensive. So if they can try and live somewhere that's close to transport, close to shops, close to schools, apartments have a great advantage because they are that bit more centralised.
Okay, and that's the nub of the attraction of apartments, I think. Michael Wilkins of Nuestar, thank you for your time today. That's the play for today. This is Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.